Hey guys, today's Friday. Was actually today a really clean trading day. I was not actually expecting that, so I thought the daily objective kind of was met, but really expanded lower. I took out so many draws to the sell side. Took out, I think, daily sets liquidity 3 times. Today was just a day where we could have taken 3 high quality setups. I will break them down. Also took one really good trade right here within basically with lunch. So basically with the lunch macro right here where the setup basically presented itself, and then we executed basically with lunch, and now also with PM we also trade lower and took out AM sessions low. So that's really just a high quality delivery today. Such a clean price run for the whole time, like for AM, for lunch, for PM. Also before we had really yeah kind of good trading conditions. So also right here in pre-market, kind of a clean price run. So yeah, that's what I'm going to really break down. In the end, you will also see my execution. Obviously, today I took this winner right here on paper, 321 bucks. So yeah, really good trading day. But yeah, let's start with the daily chart. Then we break it down and talk about the setups, why they were so high quality. That's really important to understand. So right here we are still trading basically now at external sales liquidity. So really interesting to see if we also can reach right here for CE and take out the last low of the price range right here. So it was really a tough price range, but we finally see some momentum the last 3 days especially. Let's drop to a let's first drop to a hourly chart. I think it's a bit better right there. So as you already see, we have a really textbook day today. Why? Because we have just strong liquidity pools, so relatively equal lows right here, and that's daily sales liquidity. So that's definitely a reasonable target to look for. So obviously we do have a bearish bias for today. Why? Because just we are on the daily on a bearish trend. We don't really want to trade against it. So that's basically already our bias. Now we can drop to a 50-minute chart. Already right here you can see basically London traded higher, so kind of reversed. And also, because we trade higher, you can see if we drop to regular trading hours that we have a Newton range gap basically right here to the upside. Wait, I'm a bit confused right here, so we drop to one chart higher. So on the 5-minute it becomes more clear. So what we basically have is a Newton range gap from high to the opening of 124 handles. So we are in trending conditions. Therefore, we want to see that we trade back to the upper quarter level and then continue our trend. Sorry, guys. And I think that's why you already noticed why lunch was also high quality for today, and that's sometimes or lunch. I think it becomes more unlikely, or basically the probability drops for me, in my opinion, after AM. But yeah, that's why we had also a possible trade today. So yeah, once again, trending Newton range gap, which consists of 120 handles. Also, what we do have is obviously once again the daily sales liquidity right here, which is definitely a strong draw. That's kind of also why we use the opening momentum towards the downside to use basically this session volume to take out the lows. We were not really able to trade back into the Newton range gap. That's something that definitely can occur on strong trending days where we have then only a only downside day or only up day if we would have a strong bullish trend. But now back to the opening. So I think from that we can already drop to the 5-minute as we do right here. So we already do have a really strong SMT, bearish SMT being in play, also already indicating that the opening could drop aggressively lower. Why? Because we have a bearish SMT with ES. So definitely NQ shows weakness in here. Let's drop now to a 1-minute chart and talk about the opening and the first trades I took. So, or which I could have taken. it's just so high quality today because we have so many draws towards the downside. So London lows, we have daily sets liquidity equal lows, and also stacked right there we have the midnight opening price and also 9:30 opening price, obviously, and we are both above them. So if we're in a strong bearish trend, we definitely want to see that we trade towards the downside with speed, especially if we are still basically trading in a premium in that case. So really high quality conditions. And what I really like is definitely with the opening right here, trading lower, kind of already faking out that we're going to trade lower. So that's also right here engineered says liquidity actually. So that's also nice to see. Then we trade higher. We take out the high right here. Perfect. Once again, manipulation to the upside. So we basically manipulated twice. First to the downside, chasing basically the opening towards the downside right here. And then we trade to the upside, took out the high right here. Yeah, definitely some traders going to chase long setups in here, definitely. But we have in mind we are trading with the trend. We have a strong bearish trend. We don't want to get caught up in something like that. And therefore, we want to see first manipulation before we can continue basically towards the downside, before we can trade a continuation trade. Then we had S&T right here at the high breakaway gap right here. Why? Because we want to see speed. We don't want to see that we really fill in the upper portion. We want to see that we only, at best, only wick into the gap right here, or at least stay within basically the lower portion. We want to see speed towards the downside, towards London lows at least. So that's perfect. This right here could have been already an entry, but it's a bit early. So 38, definitely possible to trade. I think I would have taken it already right there if I see some nice reaction, probably entry right there. But what I also like is to take or look at the inversion fair gap of our manipulation. In that case, towards the upside, we have also a small volume imbalance right here. That's why I included it. And as you see, we only wicked into it smallly right there, and from there completely sold off. Also wick of the or kind of a 1 minute rejection block right here of the order block, perfectly trade back to CE and sold off. What can we aim for? In that case, it's really a good, after we already took out basically both daily sets liquidity pools, it's obviously that we are not going to trade all the way towards our lowest draw for price on the daily chart. It's just too early. In that case, it's kind of obvious that we are going to see some retracement after basically our 10 macro delivered. In that case, it's a bit early. In that case, we could also mark it out, I think, right here. And that's why you have to expect that we're going to see a aggressive retracement, and we want to be done already by that. But also, if we take a look at the quadrants level, it's also really clean. So yeah, from high to low, that's our price range in that case. And what you see, our breakaway gap, or our SIBI formed right at CE. In that case, we want to see also a breakaway gap, because if we displace through quadrant levels, we always want to see that we respect them with low resistance, therefore act as a breakaway gap. That's really important. What I also really like is that we basically align right here with both candles respecting also the lower quadrant level. In that case, already also once again indicating really low resistance conditions that we are going to sell off towards the downside a lot. And that's what we got. And then we can once again aim for Fibonacci extension tools. So projections in that case, what we can aim for. And in that case, I like to look for the -1 level right there. Could also, I think, even put a bit more on. Maybe if we do it like that, yeah, -0.5 we have right here. So that's definitely something we could have also looked for. And as you see right here, -0.2, also really a level which got tagged right there. So I will remove this. And now, why do we really have a high quality trade within basically our London close macro? So first of all, as you know, the London close macro is not really always the best choice on a trending day, where we only trade towards the downside, where we have a strong trend being in play. But in that case, or basically the London close macro basically can also get used as two different options. One option is definitely that we are only going to see a short-term run on stop, so that we take out buy sell liquidity, but then the low resistance move of the macro is going to be basically towards the downside, so with the trend. So that would be that we actually see some manipulation until, I don't know, 10:55, 11, something like that, and then with 11 and with 11:15 or until 11:15 or until even 11:30, we're going to follow the trend and take out the lows after we basically did some damage to the sell side. It's just that, yeah, traders who trade their stop lower and lower just can't really participate in any lower prices, and that's why we see with the long close macro a retracement, a short-term run on stops if we are going to see a continuation. But in that case, it's get basically utilized as a higher time frame retracement, and that's what we're going to see right here. And the reason for that is clearly, as you see right here, we took out already daily sales liquidity 3 times, and that's just in that case a high quality reason or condition why we can expect a higher time frame retracement. So not only a 1 minute retracement, which is a short-term run stops, but in that case we can also expect that we see a hourly retracement, and that's already enough. That's perfect. That's what we want to see, and that's why this setup right here presented so much low resistance, because we traded in that case aligned with the high time frame. In that case, the high time frame is the hourly chart. What do we aim for? I also marked it out in the video. In the execution, you will see, for buy sell liquidity, which formed after 10 a.m. or in that case also which is in a premium of the price range. The high right here is definitely important, or the right here as well. Why? Because it's V-shaped. That's definitely a market maker buy model, what we want to look for. We could also take our AM session price range and look for the upper quadrant level, but in that case then we need to be in a market maker buy model. In that case it's a bit too much for me, so would more likely look for it right here. So that's definitely something we want to look for. Really high quality setup. We have also immediate rebalance right here. Inversion for a gap was actually not really utilized because we just had too much displacement towards the upside. Also a bullish breaker right here. Busy, so really just perfect trade, perfectly to CFD busy. From there on aggressively trade higher. Also immediate rebalance right here. That's why we also aggressively trade higher, and that's also a propulsion block, so a order block which already reacted basically off the order block right here. Probably, so I think you can say that. And that's just a really clean trade. I think I explained it clearly. And then now also what we can keep in mind is also that we trade back towards our today's new open range gap, which is still a level which has to which should get met. I mean, most of the time we meet it before, I think, 10 a.m. But in that case, it's just also still a possibility that we trade back to today's new open range gap. So also trading in that case aligned with regular trading hours. But you can't really rely on that always, so it could also be that we just have a only down day and do not even trade back into it. So back to the 1 minute chart. Now back to the last trade I took today, which was also a winner. So why is this trade now a possible market maker sell model? Why do we see continuation towards the downside? So first of all, the most important point in my opinion is the fact that we trade back to the upper quadrant level. I want to see that from there we need to see resistance. So if we have a really bearish day, especially as we see today, we want to see a trending day towards the downside, and that's also the gap indicating already. So as you know, 120 handles, that's perfect. We want to see trend continuation towards basically in that case the discount gap, so towards the bearish side. In that case, it's perfectly that we trade back to the upper quadrant level, because with that we do not only fulfill our regular trading hours bias, but we also take out the buy sell liquidity right here. So that's also really important. With that, we kind of complete the market maker buy model, and we are able to basically trade back to retrace from that to continue our trend towards the downside, because you don't ever want to take any trades against a unfilled higher time frame market maker model. So that's really important. It's really important that we fulfill basically the market maker buy model on the higher time frame. In that case, the hourly trade above the hourly high right there, and from there we can see some continuation. And that's really important. What I did wrong a lot, but yeah, learned it the hard way. And yeah, I took basically entered within the breaker. Where did I put my stop? Above our rejection block, so see right there, should be protected. Also, once again, created SMT, still indicating that we are going to be still weak on NQ, going to trade lower, and that's what we did. Unfortunately, we could not really pick up the speed and trade align with ES, so NQ was leaking a bit behind, but definitely still delivered actually in kind of low resistance. So not displacing lower, but we did not have any deep retracements. Definitely we did need some time to get to our draw for price, but still in the end always a strong direction towards the downside. Also utilize the breakaway gap right there beautifully. So yeah, entered within a bearish breaker, retraced into it. What I like to see is the fact that on a 5 minute we took out a high right there, and from there we already sold off. So in that case, that's a bolo. Why? Because the upclose candle is a order block. In that case, the wick is the most sensitive price point towards the upside, and we basically overlap it, and therefore we don't want to see that we trade even back to that. So that's really nice to see that we also respect CE kind of right there. I think I lowered my stop then after we traded below the 930 opening price towards the high right there. Took my first partial right here just because of SMT, would have been otherwise the midnight opening price. Was aiming for the low right here, but also once again SMT. Trade my stop then really tight because I could see the possibility that NQ would eventually even expand to lower. But yeah, got stopped right there, completely content with that. That's how I want to trade. I was so confident today in the market, in a trade. I was, and even if it would have failed, I would have been completely fine with that. And that's how I want to trade. That's just perfect. So if you ever feel confused, just know that today was really textbook trading conditions. You just, as I also typed it out right there, you just have to stay patient. You have to wait for the right conditions. You have to wait for a clear higher time frame direction, and then you can really participate in those low resistance quality conditions, like right here. ATM model, perfect market maker sell towards the downside, taking out so many sets liquidity pools. Then right there, also a low resistance high quality market maker buy model towards the downside as a retracement, as a higher time frame retracement. And right here also a setup which presented within our lunch macro, and then basically plays out within lunch, and still a perfect trade. So not really just as volatile as we have it within the AM session, but still a really good trading day. And also to see that the PM takes out the AM session low is really really cool to see. That's the trading day for today. Hope you enjoyed it. Hope you learned something new. I think I will still continue a bit trading paper until I finish my internship. I mean, the first week is now over. I enjoy it actually. I think it's not even that bad actually, and I think definitely I mean, trading since now 2 years, 7 months. I think I can still wait 3 more weeks until I can trade again, and I know I will definitely get there. So really strong conviction that I will get a payout with trading. It's just a matter of time. Definitely, it's just a matter of being able to detach myself from money. I think that's actually the hardest part, because trading on paper completely easy. Trading on an eval was also already possible to pass that. Was also then able to make a bit money on a funded, but always blew the funded. And I really felt how my psychology dropped immense with trading a funded account. So it's just a matter of time to understand me better, to get to the best of my psychology I can get, to detach myself from the money, to stay disciplined, to stay for to stay really patient. That's definitely a huge point. Also to take less trades, not to overcomplicate trading, to stick to my bias, to stick to a reasonable stop, to just trade and not gamble. And then we will get there. It's just a matter of time, I think. And yeah, hope you enjoyed it. Hope you learned something new. Safe trading, guys, and just sometimes enjoy. I mean, I made $0 with that, guys, and I really enjoyed it. And I think I don't know, I would maybe even trade if I could not even get money with it. Maybe, nah, probably not, but uh, it's still a fun game. It's like a video game to see how it plays out. It's just so amazing. The algorithm is just really cool. ICT definitely cooked there, and also to see so many different strategies being based on ICT is also so cool. So I don't know, Powell's 10 a.m. really amazing strategy. Then I don't know, we have Blake, we have PB Trading, we have, I don't know, TJR, who's also killing it. I don't know how, but he definitely is. Maybe also selling some courses. But yeah, ICT really cooked there, and I think you can get there definitely. It's just psychology, you versus you, period.